So, welcome to the Wealth Talk podcast. My name is Zach. Today's episode is going to be fantastic. I've done episodes like this in the past where I've talked about tips for new beginner investors, experienced investors, but there's going to be a different way we're going to approach this. I have someone here that is going to help me give her tips based on her experience. She's been doing real estate for quite some time. So, all the way from the Raleigh, Durham, North Carolina area, let us welcome Jennifer Justafort to the podcast. Jennifer, it's good to see you.
Oh, thanks, Zach. I'm so glad to be here. Thanks for having me.
Yeah, absolutely. So you've been doing real estate for a while, and I'll let you introduce yourself in a minute. But real estate investing, just real estate as a whole, there's so many nuances to it, right? There's a right way to do it, a wrong way to do it, but then there's everything in between where people have so many tips, so many pieces of advice. And I see you have 5 tips that you're going to give everyone today. But why don't you just introduce yourself, tell us who you are, and give us a little bit about you?
My name is Jennifer Justafort. Thanks again, Zach. I'm in the Raleigh Durham Triangle area, just as Zach had mentioned. I'm a real estate agent. I work with Century 21, and my business is Just Right Realty. And my focus clients are real estate investors. I'm also a real estate investor myself for the past 20 years. So I like to bring my experience to the table to help my clients. And I'm excited to share these 5 tips that not only am I going to share, but I've lived.
Yeah. Absolutely. And I think that is one of the most important things is yes, you can sell real estate. Yes, you can help someone buy it. But when you've lived it, you have that personal experience where you're like, look, I've lost money. Please don't do this. Let me tell you why. Like to me, that is some of the best experience that we can pass down to the next generation, or even someone maybe who's been doing real estate for 15, 20 years. And they can hear this and be like, oh, wow, okay, I haven't run into that yet, but I'm going to remember it. So I think that's so important. So why don't you start us off with your very first tip of, and this goes, let me just say this goes to any new investor, but it also, like I said, is for experienced investors because you're going to hear something I guarantee that will help you. So what is your first tip?
First tip for sure, hands down, is to start with clear goals. What
Love
do
it.
you want out of this real estate investment? Do you want a flip? Is that what interests you? Short term investment, long term investment? Are you looking to do the Burr method? I know that that's your in and out right there,
Yeah.
Zach, all day
Yeah. I love
long.
that. Yep.
But without, a clear goal, the strategy is going to be unclear. So you really need to have an idea of what it is that you want out of this real estate investment.
Yeah, absolutely. And what, so there's a thousand different directions you can kind of go into. Why don't you kind of break it down for us like this, where, okay, you have the Burr method, you have maybe want to hold it, you want to just flip it, wholesaling. Why don't you kind of just point us in a few of those directions? Tell us maybe why someone would want to do that. Because, like you said, if you don't know your why, it's funny. I literally just talked to somebody yesterday, and that was they're like, I want to get in real estate. I want to get started. How do I start this? And I was like, okay, before we talk money, before we talk anything, I
Yeah.
need to know why you want to do this. What do you want to get out of it? So there's so many different directions in each direction. Why don't you kind of just give us a quick little, few minutes about each direction?
Well, each of these different type of investments, there's not really a good or a bad. It's really what it is that you want and the time that you have to invest in it. So if you've got a little bit more time of flexibility, or you have a team to help manage, like a property manager, for example, one direction might be better for you than the other. For example, short-term and mid-term rentals require a little bit more hands-on
Mhm.
work in
Yeah.
the upfront part versus a long-term rental, for example.
Mhm.
And so both require, a lot of investigation, background checks, credit checks, the whole 9 yards, because you want to make sure that
Yeah.
whoever is, getting in your property is going to take care of it, right? And that they're going to stay. And so there's really no right or wrong answer. It's really the time that you have to invest in each one. And
Yeah.
of course, money is important too. So
Yeah. Yeah. That's a big one.
yeah, as we go through the different steps that I have to share, I'm going to touch on them.
Yeah.
But, obviously, how much money you have to work with and also the time that you have to invest.
Yeah, I think that's so good. It's not really saying one is good, one is bad. It's what is your goal? Because I know when talking with certain people, I talked to someone this morning actually, and it was like, hey, I know you're in the beginning stages. And he was like, look, I just need some like cash now because I want to do long term, but I just don't have a lot of cash. I feel like if I get into something and something goes wrong, I won't have the money, for reserves. So I was like, okay, cool. Well, you are a perfect candidate for either maybe wholesaling or like fix and flips. Get some cash, have some reserves. Make
Right.
sure that when you buy a rental property, AC goes out. That's not cheap. If you live in a hot climate, that's going to be expensive.
Yeah.
You need money to repair it. So I love kind of the contrast of it's not good or bad. It's just what path is best for you to start down based on where you're at. I think that's fantastic.
All
Okay,
right.
so what is your second tip for everyone?
Number 2 is understanding the numbers. You have to use key metrics like cap rate, your net operating income, your and look, I get stuck in the same spot.
Oh, bloopers are gonna be great. Bloopers are great. The realness.
The return on investment's just not rolling off the tongue.
Look, there's a couple of words for me I never can say, and I'm always like, really? I'll look at the script and I'll be like, yeah, I can read, but I can't speak. It's like, I get it. I totally get it.
All right, take 3. Number 2, understanding the numbers. We've got to use key metrics like cap rate, your net operating income, your return on investment. And if
Mhm.
I could really just emphasize one thing here is to not lean and rely on solely potential appreciation because the market can
Yeah,
change. And so, of
yeah.
course, appreciation is important, but that shouldn't be all that you're laying all your eggs in. The deal has to make sense on paper before you buy.
Yeah, absolutely. There's other things too, depreciation, tax benefits, write-offs. There's a ton of other numbers that
Oh, yeah.
play into it because something else I thought about is if your goal is to just get a bunch of tax write-offs, right? Let's say you have a 9 to 5, you love your 9 to 5, you make great money, but you and Uncle Sam are just really, really good friends and you need some tax write-offs. That's where real estate comes into play. So you're maybe not looking for a ton of cash flow.
Right.
Appreciation, depreciation, and the tax write-offs is your numbers that you should be focusing on. And so that's just something else I thought about too.
Yeah, agree 100%, Zach. And just that last bit that you said ties into number one with setting clear goals and what is your goal? Is it the
Absolutely.
cash flow? Is it the appreciation? Is it the tax benefits? Is it just like you mentioned? Is it the long term wealth,
Yeah,
generational wealth? So yes,
absolutely.
agree.
So cap rate, we're hearing some of these numbers. Where should someone start? Like, what are some of the initial numbers? Like, if I come to you and say, "Hey, Jennifer, I want to invest." Okay, cool. Let's go find some properties. Maybe we found a couple that might work. What numbers should an investor kind of start with to just see is this even a good property for me?
Great, great question. So, obviously, it's also going to depend on whether you're going to be financing this project. Are you buying it cash, right? Because all those things are going to come into play as well. But along with understanding the numbers, you want to research the market that you want to go into, and I'm going to lead into that in the further steps. But
Okay.
what does that rental market look like? What can you anticipate that cash flow is going to look like? And once you get that number, obviously there's a small little, it's not statistics, right? Or,
Right, right.
calculus. It's basic algebra, right? And
Yeah,
so, how much am I going to be receiving in rent? Times that by the 12 months, and that's going to give me what, I'm going to be getting from the year. And I'm going to subtract what my costs are going to be for maintenance, calculating some vacancies, right? And that's going to give me my net operating income. And once I get that and the purchase price, I'm able to calculate what my cap rate is going to be. And so
yeah,
for a stable market, you want to be at about 5%, right? Stable market, which is, high interest, low vacancy rate, you're going to be at least 5%. Anything lower than that, I don't recommend. But 5%, and now the higher you go, of course, the better it is. You're
yeah,
making more money, but it's also higher
absolutely.
the risk.
Yeah.
So, and again, that's what investments are all about as well.
Yeah, absolutely. And I think to each market, from what I've seen, just knowing people just in different parts of the country, different markets have different cap rates, right? Like I know out here, average is like 7.6. That's average. So if you get for us, if you get closer to, 5, it's like, okay, well, what are you doing? But in some areas, 7 is like, that's so low. What are you like, why would you ever do that? Why are you not at 10 or 15? What's wrong with you? So
Right.
I think that's so important though to understand your market. Every market is different. The job
Absolutely.
market, the economy. I mean, inflation as a whole could play a big part of it. There's so many different factors. And that's where I think someone like you who's experienced, who's been there, done that, can help a new investor. They can come to you and say, "Oh my God, I have all these numbers. All like, what do I do? Where do I start?" And you can begin to walk them through and say, "Okay, let's start here. Okay, now let's go here." So this third tip leads kind of right from the second one. So what is this third tip that someone can employ?
Location, location, location,
That's
Zach.
it.
Location
Yes.
matters. And, in step one, number one, where I was talking about having a clear goal and what type of investment, I feel like each one kind of builds on itself, right?
Yeah.
And so with the location, this is going to apply to no matter what type of investment you want.
Yep.
For example, a mediocre type of property in a strong market is going to do way better than an amazing property in a weak area. You want to
Absolutely.
find the location that is going to give you the most return for that investment. And so, whether you're looking at short term, mid-term, long term, you're looking for an area that is close to universities, top hospitals, entertainment, places that people go and visit, where there's big events, concerts.
Yeah.
So location really matters when you're talking about investment properties.
Yeah, absolutely. I mean, there's a good analogy that I love to give all the time, especially because out here there's a lot of rural areas. It's like, okay, you find the perfect 3 bedroom, 2 bath, 1,700 square feet, beautifully remodeled, fenced in backyard. Like anyone in the country would want to stay here, but it's in the middle of absolutely nowhere. Like
Mhm,
there's not a Walmart. Walmart's a big thing out here. There's
mhm,
not a Walmart for like 50 miles. A gas station is like 20 miles down the road. Now, granted, I'm sure there's someone in the world who's like, oh, that is the perfect property. But if you're buying a rental property, you're trying to appeal to the masses of people. You're trying to get a location that's, like you said, next to good hospitals, good schools. That is what the most people want. So, with the location, what would you consider a bad location?
Oh, Zach. I thought you were going to give me a slam dunk in here and ask about a good location because I can tell you
No,
that about that one all day long,
that's too
right?
easy. No, that's way too easy.
But I do want to touch on that, though. I do want to
Yeah,
touch on
absolutely. No,
that, and
absolutely. Go ahead.
I'm going to put in a shameless plug. I apologize in advance, right? But
No, there's no shame in it. Absolutely.
when looking for a location, you want to find an area that is got a booming and increasing job market, also population growth. Where are people moving to?
Yeah,
You got to do that research. And so I'm shamelessly going to talk about Raleigh Durham because
it's a great
Raleigh Durham
area.
is one of the top and hottest real estate markets in the country. And
Yeah,
why? Because we've got the major industries out here. We've got the top hospitals, the top universities. And so when you're looking for an investment property, these are the type of things that you want to look for. For an area that I probably would not recommend investing in, just as you mentioned, those rural areas, places that people don't want to live. Most people want to be able to drive 15 minutes to work, for example. And if they're working, at Duke, for example, where they have to park off campus and it takes them 10 or 15 minutes to even get in through the door, do you think that they want to drive 45 minutes to work? No, they
absolutely
don't.
not. Yeah.
So again, you want to find central areas close to downtown, close to entertainment, universities, hospitals, because those are going to be your target renters. These are the people that you're trying
Yeah.
to appeal to.
Absolutely. I completely agree. You guys have a strong university market. We have a strong university market with LSU. So I completely understand. It's interesting how a college can drive an economy. I mean, it is huge. I mean, we do have some plants and, refineries, so that helps too. But how that market next to a school, it's the easiest thing to rent. I mean, literally, you don't have to be a slumlord, but you don't have to put the most beautiful amenities. Like, as long as you give them nice things, it's comfortable, it looks good, it's modern, you keep it up to date, I promise you it'll always stay rented. But if you get a
Absolutely.
rural area, I'll never stop saying this. If you buy something in the middle of absolutely nowhere, expect absolutely no one to want to buy it. So I think that's so key. So your fourth tip, what is it? I'm looking at the notes and I'm like, yo, this is a good one. This is
You
my
got
favorite one. I'm sorry, it's my favorite one.
you got to build the right team, Zach. You've
Yeah.
got to build the right team. If you are looking for a plumber, for example, are you going to go to the eye doctor to look for a plumber? No, you're
No,
not.
I hope not.
Right, right. That doesn't make any sense.
Yeah.
So if your goal is to get into real estate investing, reach out to somebody like Zach, for instance.
There we go.
Yeah, and reach out to me, for instance, right?
Absolutely.
Somebody who not only is selling real estate, but is also putting their money where their mouth is, right? Who can speak
Yeah.
from experience and could really help you to identify those red flags before you go into it. You know what I mean? We can
Yeah.
see it from a mile away. Don't do that.
Yeah.
Don't invest in this area. Yes, the house is beautiful and the price is great, but it's in
Right.
the middle of nowhere. You know what
Yeah.
I mean? So
Right.
definitely get the right team, which includes getting the right real estate agent, lender, because again, it's going to take money to get to where you need to be. Getting a reputable and licensed contractor, and home inspector, and it goes on and on. But really, what I want to say is to build the right team.
Yeah, absolutely. I completely agree. I've been trying to build my team as well, and it takes time because people will come and then you'll be like, ah, you're not the right fit. You're great at what you do, just not the right fit for what I'm doing. And there's nothing wrong with that. But can you just explain and kind of, in your own opinion, based on your experience, how important is it? And I think out of all the industries that are in America, real estate, this is where relationships matter the most. I think there's a ton of lawyers, doctors, I get it, but most people's single biggest purchase is going to be a home. It's just they're so expensive. Can you explain how important you feel it is to have a good relationship in real estate?
Oh, absolutely. You networking is so key in this business, and collaboration, and just like you said, networking, and you have to. We need each other, really.
Yeah.
As a real estate investor and a real estate agent, there's certain things I can help you with and help you identify, but I'm not, for example, a home inspector. You know what I mean? And so
Absolutely.
but what I can do is, refer you to somebody that I know and trust, that who's really good and thorough in what they do. And so, again, it's so important to build those relationships. And, sometimes, especially when you're first starting out, you're going to have to vet some people, right?
Yeah. There you are.
That
You
stuff
better.
happens. Yeah, yeah, that's going to happen. And there's going to be some that you're probably never going to call back again.
Yeah.
But again, just like I talked about, building the right team where that real estate agent can help direct and guide you on, who are the best people to reach out to.
Yeah, absolutely. And here's a little plug for all those who are going to be watched. By the time this comes out on video, the next week's video will be about how to find the right contractor. So there's a little plug for my channel too. So finding, look, I've dealt with some fun contractors before where I've dealt with everything from overinflating a price to just walking out and they just leave halfway through the job. So having that good relationship with a contractor, plumber, electrician, and important, make sure they're licensed, especially
Oh,
if you're doing a lot of permitting work, make sure they're licensed because if they're not licensed, the city is going to just look at you like, good job. Now go get someone else to do all the work because you're not licensed. So that's the little pro tip there. So as we bring it home with this fifth and final tip, I've loved everything so far that you've mentioned, but one thing that I keep thinking is what we just talked about is the relationships that you have with people because it's so important to have people, not just one person, but people, several people in your corner who know different things because in real estate, you mentioned it, you need a lender, right? And you need several lenders, a title attorney, probably a couple of those. There's succession problems that you get, especially if you're doing sometimes like what I do, buy foreclosures. Title issues is like the biggest thing. So having someone who knows that is great. but then just everybody else, right? Having just another agent that you can talk to bounce ideas off, another professional in your space, those networking events, Facebook groups, relationships inside of real estate, I can't stress it enough, are so important. Did you want to add anything to that before you bring it to the fifth one?
You said it so well, Zach. No, I have nothing to add to that. I mean, that
Yeah.
100%.
Perfect. So let's bring it home then with your fifth and final tip. Hopefully, you guys have been enjoying this one. You can tell she has tons of experience. So, what is your fifth and final tip?
Zach, don't wait for the perfect deal.
There we go.
And I like to call it analysis paralysis, right?
Yeah.
We can overanalyze something so much
Yeah.
that you just kill the momentum and you lose an opportunity to get a great deal. I just want to preface there's not going to be a perfect deal, right?
Never,
It's
never.
never going to be
Yeah.
perfect. However, if the numbers work, which we talked about already, and the risk is reasonable,
Yeah.
take a chance, take action.
Absolutely.
Otherwise, just like I said, you could lose the opportunity to get a great deal.
Yeah, absolutely. I've been there, done that, and I have talked myself out of a good deal before. And then next thing you know, it's not available no more, or
Mhm,
now the
mhm,
deal's not as good because rates have gone up, or maybe that lender. This has happened to me before. That lender says, you know what, we don't actually lend that property or that state anymore. Sorry. It's like, oh man, really? Like you talk yourself out of a deal. It makes no sense. But that analysis paralysis is 100% real. It's
yeah.
legit. So, how does someone go about knowing maybe a good deal versus a bad deal? I know we talked a lot about numbers and stuff, but what are just a few key things someone can just quickly look and say, "Okay, that's probably a good deal."
Just like we mentioned in the prior steps, if you got the location, the numbers make sense. You've got the funds, you got the team, you found the property. Go for it.
Yeah, you've
Go for
literally
it.
done everything.
You've literally done
Yeah,
everything. And that's why I said with these steps, they kind of build on each other. And so I wanted to end off with this because it's true. We don't want to overanalyze and kill the deal.
yeah,
And yeah, if
absolutely.
you've got all those other steps, go for it.
Yeah,
You're going to learn more from that first real estate investment tip more than any kind of research you could have ever done.
yeah, I
You
completely
will learn
agree.
the most.
Yep. If it's funny because one of my original coaches and mentors, she told me, she said, "Look, if your first real estate flip, whether you hold it or sell it, if you make money on that, you're doing better than probably like 50% of others because they most likely lost money. Sure, they gained experience, but they lost money.
Right.
Why not gain experience before you jump in, you learn everything about it or learn as much as you can. So that way, when you go into it, yes, every investment has a risk, but you're not just taking a blind risk. You're taking a calculated risk. You've also planned for what I love to say is when things go wrong, not if, because I
Yeah.
promise you they will go wrong. Every property, no matter what you do, no matter how much you plan, it
Yeah.
will go wrong. Something will happen. But if you
Right.
plan for it, if you're educating yourself, and then you know if you have the right team in place, have the right people in place, you have people that can solve any problem that happens. If it's a foundation problem, if it's a title issue, if the roof starts to leak, whatever it is, you have the team in place. So, Jennifer, this has been fantastic. I know you were hilariously nervous, which those bloopers, by the way, we're gonna do something for that because that was awesome. They were like, no, they were awesome. But Jennifer, like I said, you've been amazing. You've given people tips that I'm gonna remember, keep using. But if people want to follow you, want to connect with you, where can they do that?
Thank you again so much, Zach, for being here. But yes, please follow me on Instagram, Facebook, TikTok, LinkedIn, and my handle is at Realty Just Right.
Perfect. And I'll link all of her social media down in the description so you guys can follow her. Jennifer, again, thank you so much. I appreciate any final parting words.
Yes, just like I ended with the number five, don't fall into analysis paralysis. If you've got the right numbers, location, the right team, and the numbers make sense, go for it.
Yes, absolutely. No, thank you again. For anyone watching, don't forget, you got to hit that like button, got to subscribe. And until I see you in the next episode, remember to stay wealthy.